The higher the nominal price goes, the moves are going to get bigger. When gold was at $600, 10% was $60. Now 10% is $200, and that's why it feels so volatile. But yeah, we'll have to see what happens in the next week or two. If they're able to push it back below 2,000, they might. But it all looks pretty good, unless, of course, the Fed and the other central banks don't pivot. It looks like the market is expecting some kind of cut in late spring. So, and I think gold is already kind of forecasting that. And that's one of the other reasons why, it's been so strong of late.
Gold edged higher after a dramatic session that saw it surge to a record on U.S. rate cut speculation before reversing those gains to close down more than 2%. MarioInnecco, a seasoned financial commentator with expertise in navigating market dynamics. In this video, MarioInnecco indicates short-term gains for gold and silver stackers, highlighting the lasting impact of the dollar's decline. Last month, the euro rallied 3% against the dollar and hit its highest since August at more than $1.10, as data showed U.S. inflation was cooling rapidly. The dollar index dropped 3.1% in November, in its biggest monthly fall in a year. Gold rose to fresh all-time highs on Friday after 3 straight weeks of gains as softening inflation and continued conflict in the Middle East boosted safe haven buying. Meanwhile, he highlights gold's enduring value by comparing its purchasing power with assets like oil over the past 50 years. Historically, the gold-oil ratio holds a 16:1 long-term average. Usually, the range is between 10 and 30. Because gold and crude oil are both denominated in U.S. dollars, they are strongly linked. Regarding CBDCs, Mario urges caution, hints at potential mandatory adoption, and emphasizes the stability of holding physical gold and silver. Many critics point to the loss of anonymity and the heightened surveillance powers as reasons why CBDCs won't be adopted. By replacing physical currency with a digital form of central bank money, governments could control how, where, and what we spend money on. Investing in gold and silver can provide benefits such as portfolio diversification, protection against inflation, and a store of value during economic instability. Now we present the clips of MarioInnecco's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
It's a good thing for stackers when the price of gold and silver go up in dollars, but the other way we need to look at it in the long term is that the dollar is going down versus a gold and silver in the long term, and that you need to stay balanced, not get too excited, not too despondent, and that it's not speculation. If you were trading gold in Venezuela about 10 years ago, at one point, the Bolivar did quite well, and you got out, because you're tired of trading, you didn't think gold would go up again. You got left holding a bag of bolivars that is worthless now. And I think the same thing is going to happen to the dollar and all the other fiat currencies vis-a-vis gold and silver. It's really simple because, if you look at the price of gold, how many barrels of oil we can get with an ounce of gold, it fluctuates, but over the last 50 years is about 15 to 20. So it's a real measure of value. And also I've got here a sovereign, which is just 1/4 of an ounce. That hasn't changed today. It's the fiat currency that changes because they issued too much of it. Yeah, and if you go back even further to 1971, when Nixon closed the gold window, the dollar's lost 98% of its value versus gold. So that's the way to look at it. Of course, there are people out there who will trade gold for fiat dollar profits, and that's completely different. If you want to do that, that's a different game. Central bank digital currency, the name itself says central. It's not decentralized on the, they might say, oh, it's on a blockchain, but I think that wouldn't be true. true. I think, they're very determined to get a CBDC through, mainly because the current system is dying, in my opinion, and they have to have a replacement. And I don't think it will work. How people should react, it's difficult because so many people are, they think it's convenient. If you're not of that opinion, then the only way to try to stay outside of it, and unfortunately, I think if they bring it on and they force it onto the public, we'll have to use it. But having, physical gold and silver outside the system, that's a good thing because they can't control that. And the other thing is, having a lot of fiat dollars or fiat pounds right now in the bank, that could be under threat if they bring in a CBDC, because that they could say you can't use that anymore. We're going to give you CBDCs, but we're going to give you only a tenth of what you had. So that's how I would look at CBDCs. And I was reading again Fiat Money Inflation in France the other day, one of the chapters, and they said that after the assignats, which was their experiment in money printing during the revolution, they tried to bring in something new called the mandats, and that was supposed to be gold backed, but that didn't even work. So I think that's how the CBDC is going to be. They'll try to bring it in. It might work for a while, but eventually it will. It won't be any good, I don't think.
MarioInnecco, with experience since 2002, highlights paper gold market instability and stresses considering alternatives to fiat currency due to potential consequences of supporting government actions. As the US dollar weakens, gold becomes more affordable for investors holding other currencies, potentially increasing the demand for the yellow metal. The surge in demand for gold has the potential to drive its prices up, making gold an enticing investment option for anyone looking to guard against market volatility. In recent months, Mario has seen a shift to Bitcoin among sound money advocates, but he firmly maintains gold as the preferred choice. Bitcoin's market capitalization has never come close to that of gold. That's even when the digital token's value was at an all-time high. The World Gold Council estimates that gold's market cap is around $10 to $11 trillion. This figure is about 8 times more than the market capitalization of Bitcoin. Let's get back to the interview.
I think the reason why we're seeing the volatility is that we've broken, very key technical levels from the last almost 4 years, that 2050, 2070. And then last night, my time or afternoon your time, someone came in and covered probably a lot of paper shorts, and that took the market way up to just below 2150. And it's like a line in the sand. Usually that kind of volatility happens when you break such key levels. We had like a triple top there, and we broke through there. A lot of energy, and that's why that happened. But in terms of the volatility in the last 24 hours, yes, it has been volatile. But I looked at someone put out a report. It's based on the last 5 years, and they've got something called the Sharpe ratio, which measures volatility and return of an investment. And gold is like third on the list. It's been the least volatile and the best returns in terms of the Sharpe ratio. So it's actually a very stable, call it investment. I think the top two were like a long and short hedge fund portfolios, or stuff that was really hedged. And Bitcoin, for example, the Sharpe ratio on the ranking, they were way down where compared to gold, even though they have done well. So that's what I would say. And the other thing that I always think, because I've been looking at the gold market since 2002 when I started buying gold, and I could tell right away that there's something fishy in the paper market. What I tell people is, what's the other option? Do you want to get rid of your gold and put it with the banks, fiat currency. It's not even legally yours. It's an unsecured loan. And the other thing is, well, do you really want to have a lot of money in the bank right now? I don't think so after what happened in March. And we know the latest FDIC numbers weren't very good. The unrealized losses on securities, it's approaching 700 billion. That's how, whenever I get a little bit annoyed about these moves, I always think, what's the alternative? And to me, there isn't. And the other one is, do you want to finance the current administration in the U.S. or the current administration here in the U.K., where they let in 745,000 illegal immigrants or migrants in 1 year, which is over 1% of the population. So that's the other way to look at it. By keeping fiat currency in the bank, you're financing all these things. Again, you might be okay with the Biden administration or the Sunak administration. That's up to you to decide. It's ironic because today, we reached an all-time intraday high, and now it's come off massively. I bet, sentiment, even within stackers, is really low. So, yeah, like you said, there's very little public interest. It seems like in the last month or two, people have gone back into looking at Bitcoin because there's a lot of sound money people that gone into Bitcoin. I used to cover Bitcoin about 6 years ago. It's better than fiat, but I still think gold is the way forward. It's like, I'm a golfer. If someone said you have a choice of playing the old course at St. Andrews, going there and playing, or you have a choice of playing St. Andrews on a simulator. I'd take the bad weather in Scotland and playing on the real course than going to a indoor place where it's nice and warm, but playing it on a simulator. That's how I see, Bitcoin. Gold is real money, and Bitcoin doesn't have the thousands of years track record, really.
Analysts wonder if the viability of CBDCs as replacements for the current financial system. As an investor, it's crucial to stay attuned to these developments and assess the role of gold in a diversified portfolio. Are you inclined to see gold as a resilient safe haven asset amidst economic uncertainties, or are emerging alternatives more compelling? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.